you all will be fine. Well, in this video I'm going to tell you about future trading on Binance, that what is basically future trading. So we have because many people are asking me questions about future trading, so I decided to make a small video, a basic video about future trading on Binance. Now what is future trading? As you all know that on Binance you have different ways of trading, but there is some spot and future trading. Now most of you already know about spot trading because you have been doing this, but in this video I'm going to tell you about future trading. So what happens, this is the main screen of Binance. Now you will click derivatives and USD. Now this is how the screen of future trading will be opened. But as you know that, but when you will be opening this first time, then it won't open like this. You have to unlock it by giving a simple quiz, and that's very easy. You have to just click on any option, then submit, then again click green, which are the correct answer, then again submit, then this screen will be open. Okay, now the second question is interface. Difference of spot and future trading. As you can see, this is a screen of spot trading. You can see over here it's written spot. This is a spot screen. Now its interface is different from this future interface. You can see that over here nothing is written, it's the coin name, then the rate. But in future you can see over here is the coin rate, then it's written perpetual, then there's some affiliated and some other mark. Then over here you can see the interface of buying selling is different as compared to spot. Over here it's buy sell, but in future it's not like that, it's different. The chart of course is going to be same because it will be showing all the trading view analysis. So this is the basic difference between the interface of spot and future. Now the third is what is difference between isolated and cross. As you can see, this is the future screen, and over here it's written isolated. When I will click it will show me like this screen. And how you want to do the trading, because this is the basic thing. You must select any of this before starting the trade. Now there are two options, cross or isolated. Now the difference between them is, for example, this is a little tutorial. For example, in cross, if I have balance in my future wallet, okay, I want to tell you something before that also, that when you will come into future screen, your wallet over here will be 0. So what you have to do, you have to just click this icon. It will open the option like this. Then you have to transfer whatever USDT you want from your spot wallet to future wallet. Okay, and you can transfer how much you want. Okay, now for example you have 50 USDT in your future wallet. You invested 20. Now how much left in your future wallet? 30 USDT. Now what happens? Now this is something else. Now, for example, in cross, the drawback of cross is if you get loss, means if the price of the coin comes exactly to the liquidity price, then your entire balance in the wallet will be 0. For example, you have $50 in your wallet, you invested 20. Now 30 is balance, is still balance in your wallet, but if you got the loss, then all net balance, switchables, everything will be zero. Okay, this for example, if I have 50, you think that you have 30 in your balance, but if you got the loss, if liquidity gets if the coin price comes to exactly to the liquidity price, then you will be in loss and your net balance will be zero. Okay, now however, when you come to this option which is isolated, now what happens in isolated is if it's opposite. For example, if you have $50 USDT, you invested 20, you have a net balance of 30 USDT in your wallet. Now in case if you get the loss, in case you get the loss in isolated, your net balance in wallet will not be zero. Okay, for example, like this, if I copy it, or if I copy it and paste it over here, and if I show you like this, that I write it isolated, you have 50, you invested 20, you have the 30, you get the loss, uh, only in invested USDT will be vanished or zero. You will still be having 30 USDT in your wallet. So that's the difference between cross and isolated. I'll tell you again, that is in cross situation, if you have 50 in your balance, you invested 20, net is 30, and if you got the loss, if liquidity comes, on the coin price comes a liquidity, all will be in loss. Okay, but in isolated, you have 50, you invested 20, and net balance 30. If you got the loss, only invested USDT will be vanished or zero. Let it be zero, and this column doesn't have to do anything, just for understanding. In isolated, only invested amount will be zero. Okay, now you would have understand the difference between cross and isolated. Okay, now what fourth question is, what is leverage? Now what is leverage? Leverage is over here, and just leverage. Now what is leverage? Now I'll tell you that. Now this is the example. What does leverage do? For example, you think that I will invest $20. Okay, now what does leverage do? Leverage multiplies this investment with the leverage you requested. Now as you can see in this chart, you had 50 in your wallet, you invested 20. Okay, you took the leverage of 10x, means 10 times. Your investment becomes from 20 to 200. Isn't that great? It seems very great that you just had 20 and you multiplied your 20 USDT investment into 200. It's simple, like 20 multiplies by leverage requested. Now if I now as you can see that you have the option to take leverage of approx 50 times. Now for example, that you are in, if I wish to invest 20. Now for example, that if I think that as I have the option over here that in leverage I have the option I can go to 50x. So what does it do? I'll make it 50, then it becomes 1000. Now just imagine that you had you wanted to invest, you had 20 USDT with you, you took the leverage of 50 and now it has become 1000. Now just imagine that just your 20 USDT investing amount becomes 1000. Now it seems so fascinating and so good, but always remember, with bigger risk of profit you can have the biggest risk of loss. Now it seems very good, very cool that you can go to 50x and then you multiplied your investment to the 50x times. But always remember, with big profit you have the chance of biggest loss, and same can happen. You can see yourself that if I just cross 20x, it gives me this warning. It tells me that your leverage is high. Please manage your risk accordingly. It's giving you warning that you are taking a very big leverage. You can have the loss. So please take care of your leverage. So leverage, it depends on you, that if you have the courage, if you have the big wallet, so you can take the big leverage, the big profit, and simultaneously can have the big loss also. So I hope that you would have understood that what is leverage. Okay. Now what is funding countdown? Now over here you can look over here that there is written over here funding countdown. Now what is this? It means that if you are doing a future trade, so you have to pay certain percentage to Binance for using this future trading option. Means it's like that Binance is giving you the opportunity or giving the chance to take future trading with big leverage, so you have to pay them this percentage of fee. So this is funding, and this timer gets started after every 8 hours. Means when this will end, then again the cycle will start, and this percentage can also change. So try to close your trade in a little time. Okay. And now the sixth question is how to transfer fund from a spot to future wallet. Well, maybe I would have told you before. You just have to come over here, you have to click over here, you have this option from spot to USD future. You would be having some amount of USDT on your spot wallet. You will just write that number, whatever you have, then click confirm, and then 10% that USDT will be transferred from your spot to future. And same you can do vice versa, that if you have earned, for example, 100 200 USDT profit, you can transfer it from your USDT future to spot wallet. Okay. And now we have done with this question. Now what is entry price with limit on market rate? Now as you can see that in spot trading you have this screen, you have buying option, you write some amount which you think that this price would become, you put that price, and then you put amount over here and the total USDT you want to invest, then buy. Okay, then the sale order, buying order comes over here. But in this situation in future trading, this option is little bit same but different. Okay, over here same, you can buy the coin on market price or limit price. Okay, now it's same like that, and the market price is 7.001. You may write at 6.89, assume that this would be the price. You write it over here, then you will select the percentage, how much you want to invest. You have 14.89 USDT and you plan to invest 50%. Okay, now the 50% of this would be around something 7 point something, that would be multiplied by 10x leverage, and that's why I would be able to buy 10. Otherwise, if this would be some spot trading, and if I would be investing 7, so I would be able to buy only one coin of quantum. So now you can select whatever percentage you wanna buy. Okay. Now this was buy long with limit or market rate. Okay. The next is what is buy long and short. The buy long, as I told you, that you will by setting some price and percentage you wanna buy, you will click buy. Your order will be placed over here. Okay. So what is sell short? It means that there is a different way of earning. Like in a spot, you have a simple way, you buy and then you sell. But uh, in future trading, what you can do a reversal. Instead of buying, you can sell. Now you would be a little confused if without buying, how could you sell? You can sell by setting, by assuming this the price it will go down. For example, currently the market price is 7.40. Okay, now you assume that this price will go to this level around 6.163. So you will write 6.163 and you will click sell short. Okay, now when the price will fall down to whatever you set the price, the number of coins will be yours. Now you would be thinking it's same like buy long and sell short. So I would suggest that currently just leave this. It's just about to tell when I will be doing a trading video. Then you will get the clear picture that what is buy long and sell short. But just one thing clear, that over here in future trading, sell does not mean that you buy and then you set the sell price. It is not like setting the sell price and then sell your coin. Okay. Now what is stop loss? Well, I will answer this question. I'll cut it and I'll put this question over here, because after liquidity question, this after this makes sense. Now what if we have how to calculate profit and loss. Now in future trading, you can assume or you cannot assume, you can calculate your profit and loss. My screen is little bit for example, you see there is sorry, it's not going. Wait. So you see that there is an icon. There is an icon over here. It's like a small calculator. Okay. You will click this button and this screen will appear. Okay. Now let me just adjust the screen again. And there is a calculator icon over here. Okay. I don't know you can see it or not. It's over here. Okay guys, as I was telling you about how to calculate your profit or loss. Now for example, this is by clicking calculator over here, I have got this chart or this table. From this I can calculate my profit. Now what will I do? PNL is selected, means profit and loss. I'll click long. Now I'll select the leverage to 10 because I took my trading on the basis of 10 leverage. Okay. Now my entry price for quantum was 7.419. Okay. Now for example, I assume that its price will go till 7.69999. So I'll just put the exit price. It means the price on which you would like to sell, on which you would like to have the profit. And then quantity, as you know, the 7.3 I have, so I will write 7.3 and I'll just click calculate. Now you see that it's showing me that on this entry price with this exit price I'll be having the profit of 2 USDT, which means that if I'm investing whatever the amount, I'll be having the profit of 2.04. Now just for example, if you had invested 30 leverage, okay, your everything would be same, then you would have got, okay, the profit is same but now quantity would have changed. Might be you would have got I think 30. If I make it 30, no sorry, it doesn't have connection with it. Maybe if I suppose it's 50, you would have got the 14 profit. Now more the leverage, more the profit. So now what you have to do, you have to keep the leverage 10. Always remember, for a new trade, if you are the beginner, then you have to put a leverage of 10. Okay, so that's how you can calculate your profit. For example, if I see that the price has gone from 25999 and the quantum which I have is 7.3, then you can see that I am in loss of 1.17. So that's how you can calculate your profit or loss over here. Okay. Now the next thing is that what is liquidity price and how to calculate it. Now what is liquidity? What is liquidity? Now you see over here that I have two positions over here. I have two coins currently, BAT USDT and Quantum USDT. Now you see that there is a value over here called liquidity. It's liquidity price. You can also see how to calculate it. Same, we'll go to this calculator over here. We'll come to liquidation price. We'll convert cross to isolated because we are doing isolated trade. We will select the leverage to 10. Then our entry price was 7.419. Quantity we have is 7.3. And balance, how much left? Might be 4. The balance is the amount which is currently in your wallet. For example, you had 50, you invested 20, so 30 would be in your wallet. So currently I don't remember how much are in my, okay, currently I have 3.87. It's not calculated because it's saying that it's lower, because I'm writing now. For example, if I had 5, still not 8, 6.387, but at the time of investment I think I had 11. Sorry, I don't remember. So however, if you would be doing the trade, whatever will be in your balance you will have to write over here. So your liquidity price will be calculated. Now what is this liquidity price? What is it showing? It's telling you that as currently you can see I have the coin over here, it's quantum. Now if the coin price, which is currently, if the market price becomes or comes equal just to this liquidity price, then my investment in quantum will become zero. Okay, now as you can see over here that entry price is 7.419. Okay, entry price 7.419, and if market price and liquidity price, market price is 6.954 and liquidity price is 6.783. So what does it mean? It means that as this market price comes to this or lower than this, then my whole investment will be zero. Means the $20 which I invested, this $20 will become zero. You can check like this, that if market price becomes exactly same as of liquidity price or gets lower than liquidity price, then my investment will become zero and I'll be in the loss because my whole investment is zero. Now what you can you will be in loss and your whole investment will be zero. So this is the liquidity price. It's very dangerous thing because if it will be near to your market price, then you are in danger every time. So try to have this on the lower side. Okay, so I hope you would have understood about the liquidity price and how to calculate it. Now the next question is, what is stop loss? Now what is a stop loss? You can see over here, stop limit or stop loss, both are same thing. Now for example, over here you can see that your liquidity price is 6.783 and your entry price was 7.49. Forget about the market price right now. And what is a stop loss? What you will be doing in stop loss slash stop limit, both are its name. Now what you do that you see that the entry price is 7.49 and for example market price first becomes 7.3, then it becomes 7.15. So you are seeing that your market price is decreasing gradually and it's coming near to liquidity. Then what you can do, you can put the stop limit, means you set the price that on this price the trade should be ended and whatever I'll be having, I'll come out from the trade. Now for example, you had the entry price of 7.419 and the liquidity price was 6.783. Now as you know that if market price becomes exactly the same liquidity or gets lower, then your investment will be zero. Okay, so to save yourself, you have option of stop limit. You put the value and on this value the trade should end and I'll be out of the trade at least with some quantity of my investment. Okay, understood? I hope you would have understood. Now let me tell you, let me explain you about the stop loss. Now, for example, as I told that you have entry price of 7.49. For example, your investing amount is 20. Okay. Now, as if the liquidity price, let me write over here, your investment is 20 USDT. Okay. Now, as you know that if this thing happens, then your investment will become zero. Okay. So to save yourself from this, what you will do, you will put stop loss. That if the market price comes to this extent, so please take me out of the trade so that I don't have zero in my wallet. At least I would be having at least what I would say that investment after coming out of stop loss. Now it can be for example, you come out of the trade with and you have just 8 USDT. So it means that if you will put some amount, if you will set the price at a stop limit, so you will come out of the trade with at least some amount of USDT. You won't be on zero. Okay, you will be having some amount of USDT to trade further. Okay, now let me explain you once again that about this liquidity and about this stop loss, that if you entered the market with this, okay, and your liquidity price was this, now when the trade began, the market price kept falling and you had the fear that if the market price comes exactly same to liquidity or lower than liquidity, then your whole investment will be zero. Okay. Now to save yourself from becoming zero, you set stop limit, okay, of a price, so that on this event, so that if market price comes to this price, then please take me out of the trade with at least some USDT or some investment. At least I won't be standing zero. I will be having at least some investment in my hand from my invested amount. I invested 20, so instead of becoming zero, I will be having at least some amount of USDT with me. However, I will be in the loss, but at least I will be having some coins or some USDT to trade further. I won't be standing zero. Okay. So I hope that you would have understood what is the stop loss. Now the next thing is what is margin isolated plus. Now there is another way. Now for example, you can see over here that there is a plus sign over here. Okay, there is a plus sign over here. Now this is, as you can see, that it's margin isolated. As the question is, what is margin isolated? Now what will I do that I can make it more lower side if I invest or if I enter whatever USDT balance I have. For example, I have available balance of 3.87. Now what will I do? Just check this liquidity. Currently my liquidity is 6.783, same which is over here, 6.783. Now I have some USDT and I saw that the market price is coming downward side and I can be liquidated So to make it more lesser side, what will I do? I'll add my uh, balance. Now you saw as I added more USDT in it, the liquidity got more lower. From 6.783 it came to 6.247. So from stop loss you can come out of the trade with some USDT, but there is another way, and it's add margin, that whatever USDT you have you can add over here, and through this your liquidity price will get more lower. So this is margin isolated. Now what is open order or position? Now it's over here like open order, just like that I place order of link USDT, and then I set the price on 29.89, that when the price comes to this this open order will be shifted to my positions. Positions means the current trade which you are having in your hand. Okay, so this is open order and position. Now how to take profit? Okay, now many people do this mistake, that like spot trading, they think that they will go to sell, they'll set the price and they will sell for them, but no. In future trading you don't go over here and you just enter the price and you click sell. No, never do this. In future trading we have different way of setting the taking profit. As you can see that I have these trades. Now over here there is an option close all positions. If I would click market, so what will happen? This trade will be sold on the market price. Okay, so you can see there is a pencil icon over here. You will click on it. Now you see it's written take profit. Over here you will write this profit price, means my entry was 7.419. So I would say that okay, when this becomes 7.699, then please sell, and I'll click on confirm. So like this you will set your taking profit price. Okay, if you want to sell on the market price, you will just click market and your trade will be sold on market price. So guys, I think that my video would have made you understand some basic information about future trading on Binance. This video was just about the introduction of future trading for the beginners. Next I'll be making a video on how to trade. Okay, at least in this video I have also shown you how to trade. You would have understood at least basic information about how to do trading on future of Binance. I would like to tell you again that future trading is very risky, and with greater profit comes greater risk. So always be careful when you're doing future trading. Please do proper analysis before doing any future trading. Okay, so if you have liked the video, if you have understood it, so please like it, share with your friends, share with the people who are beginners so that they can learn. Comment on this video if you have any question, and like it, subscribe it, share with others, and I hope and I wish you best of luck guys for this future, because in future you have very big margins for taking profit. So please be very careful. Okay, thank you, bye, be happy.